welcome to a very special edition of our OR Talks podcast. Today is our first birthday edition of our podcast. Here are your hosts, Neil Seeger
and Marc Jovanovic.
Right then, thank you for joining us. Can you believe it's been a year?
Time flies.
One whole year we've been together, Mark. One whole year.
Time flies when you're having fun.
Oh, I'm taking that as a compliment.
It is.
So one year, I honestly, I don't know where the time has gone.
No, we've had loads of good guests as well, haven't we?
Fantastic guests. Actually, while we're on the subject of guests, Mark, I'm going to put you on the spot here. And I know you didn't. I was going to ask this question, but who is your favourite guest?
Now, this is a dangerous question.
It is a dangerous question. I know my favourite.
Yeah.
But I'm not going to put you under pressure asking your least favourite, but I'm going to ask you for your favourite.
My favourite. I think the favourite one, in terms of when we were doing it and everything, was probably with Pete and Gary, to be honest.
Don't pinch mine.
And I'm not just going safe there, go with those two either. No, it was genuinely, I learned loads from that, about them and everything.
It was really informative, wasn't it? It
Yeah.
gave us an idea of what it was like to be in business from two people who have been there
Yeah.
for the good times and the hard times. And it was a nice Christmas special as well, wasn't it?
It was, yeah. It was a bit different to some of the others, but we've had loads. Like Tony was really good.
Yeah.
Rachel was really good as well. Like all of them.
But that way back when, that feels like years ago, that first one, doesn't it?
Yeah, doesn't have. Yeah. So
And hopefully you guys have found it as interesting as we have.
definitely, we've learned loads. I've learned loads of things, like things that we do in the business that I don't necessarily see going on. And
We just don't see it, do we?
No.
You know, we can't. No one can see everything.
Yeah.
But you know, it is nice to be able to. I find it fascinating to find out bits about our own firm and about the tax legislation.
Yeah.
Because there's funny things that came up. Even the other week when we were talking about PM&Ds and
yeah,
all those interesting things that come up.
definitely. When we were looking at service charge accounts as well,
Yeah.
something that never comes into the tax side, so I don't really get involved in it. But it's interesting what goes on.
And
over
all
there.
the key terms that come up, the things
Yeah.
that you just have never heard of. You know, obviously I put some funny comments out there sometimes on them, but just how it's easy to remember.
Yeah.
You know, and actually, just so you know, I haven't invented the Neil phone. I haven't come out with it.
You haven't.
No, I haven't launched it. Yes, the R&D was there, but I haven't bothered. And I haven't done any of the other things.
It's
I've come up with.
probably for the best. So you're not doing your plumbing anymore either.
I've quit that. I've realised accountancy is my way forward.
Probably the safe one to stay with.
So we're staying with your safe one as your favourite guest, being Pete and Gary.
I think so, yeah. So just in terms of it was easy for people to relate to. I think they've been through it, started a business, developed it, and grown, and it's a nice one that people listening could relate to in a similar situation.
Well, I've got to change mine, haven't I? Because we
Yeah.
can't both have the same. I'm going to go with Tony. Only because it was the overall thing it had. It was a very serious service charge, and learning an awful lot about the property lets and all that sort of stuff.
Yeah.
But he also had his makeup done,
He
and
did.
no other guests have had their makeup done.
And he had his blue pills
And
as
he
well.
had we can't call them blue pills. You mean his blue M&Ms?
Yeah, he also had his blue M&Ms with him, didn't
Which
he?
weren't
So-
M&Ms,
Yeah.
they were like Smarties. But yes, he had those,
Yeah.
and that's why I'm yeah. You can't start holding podcasts talking about blue pills. But yes, that's going to be mine.
Yeah.
But as I said, I learned an awful lot from Rachel, as you said, about the journey
Yeah.
of coming through as an apprentice all the way through, which I think people forget that our job is a career. It's not just a job that you turn up and straight away you can do it.
Yeah.
It takes years, and actually you're always continually learning, no matter what level you are.
Hopefully through the podcast, people have sort of seen what a team we are here, how people grow within the teams and everything. It's not just a job, is it? It's more.
Well, it's not, and that's just from our experiences,
Yeah.
but you've seen that from partners, you've seen that from other managers in the departments, and it's not just, and also people can see that we're not just accountants.
Yeah.
An accountancy is not just putting together a set of accounts.
No.
There's all sorts. I mean, we've had how many guests we had over the whole thing now? I've lost count. I mean, we've actually had.
You're not prepared with this. I
I'm not
thought you'd have the facts and figures here ready.
I don't turn up. I just wing live, don't I? But no, with all the guests we've had, you've actually seen that we have loads of different specialisms, and we haven't even had all the areas in yet.
No.
We've still got more to come, which is good and exciting. So we're going to go for series. We're already been through series 2.
Say, yeah.
But they're not going to cut us off in series 2. We're going to have a couple more series of this. So you're going to still hear our voices, which I know you're really happy about that. But
no, and hopefully everyone's learning through this as well.
Hopefully, well, we are.
Yeah, exactly. So if we are, then
hopefully all the listeners are learning. And if they're not, then please write let us know. Yeah. Give us a WhatsApp.
That's it. And it's just raising awareness of things that you might not be having any clue on, that you even have to think about, and it's that we're here to help. And
yeah, well, I was speaking to somebody literally only 10 minutes before we came in here, and they brought up about our podcast, and they said that a lot of the stuff goes over their head, which is fine because everyone's got their own specialist area that they're interested in. But actually, they said that they've learned little bits off every single one.
Yeah.
So although they don't know everything about it, which the idea of this isn't, it's not a lecture.
Definitely, yeah.
They've learned. Which is really nice, actually.
It is,
good feedback.
Yeah.
Only 10 minutes before we came in, you couldn't have written it. Literally put the phone down before I came in here.
Perfect, yeah. But that's all it is. It's about just giving people an idea of when to ask a question.
Yeah, it's trigger points.
Yeah. Not expecting people to learn everything and become experts. We don't want them that.
There's an exam at the end of the series. But there's, I suppose, it's nice saying happy birthday, and it's nice to have you reached our first birthday, which is a massive achievement that we're still together after all we've been through, But it wouldn't be, an On My Rutter, podcast if we hadn't got anything a little bit tax related.
Yeah, definitely.
So I'm going to ask Mark, have you got any? And he's not prepared for this, so I'm catching him off guard again. Do you have any fascinating tax tips or anything that we've got to be aware of at the moment?
Fascinating is probably not the right word, is it, with tax? But
okay, have you got any taxing ones?
So, like, from a personal point of view, there's just the things to always be aware of that you can put into your code to increase the amount of personal allowance that you can have, sort of things in appeal. Oh, no, like that.
Okay, cut that.
Yeah, I've gone off on it. So yeah, from a personal tax point of view, there's just the little things to always be like admin tasks to be aware of. So
what are those?
So like if you're working from home, making sure that you've got the working from home allowance in your code.
So I can claim tax relief for working at home.
Yeah, essentially, yeah. So you can just adjust your POE code and just get a little adjustment in there. It's not loads, but every little helps.
And my POE code is that 12,570 tax-free allowance I get.
Yeah.
I can increase that amount.
Yeah, so you put an extra £300 on there, yeah.
That's amazing. So that's like 60 quid. It depends on obviously your rates and that sort of stuff. But let's go simple.
Yeah.
So that's amazing.
Yeah, and this is little things like that. So any gift aid donations, if you're paying high rate tax, keep track of those at the end of the tax year. You can put those in and you'll get the tax relief for them. So it'll extend the amount of tax you pay at 20%.
Oh, so I'm going to go round. I know it's a bit more than 50,000, but let's just leave some easy numbers. Yeah. So 50,000. So if I'm really generous and I've got loads of money and I put £10,000 into a charity, that means that actually I can increase my 20% allowance of my basic rate band from 50,000 to 60,000.
Yeah, roughly. Yeah.
I know it's a little bit more than that, but
But it's something people don't always think about. They make charity donations throughout the year and they don't keep track of them.
And they'll tick the gift aid box.
Yeah, that's what it means, yeah. So when you're ticking that gift aid box, it's good for the charity and it's good for yourself as well. So.
Yeah, so they get the extra top up and then you get to send the tax yourself.
Yeah, exactly.
So it makes sense to do that, that.
Yeah, so it's things like that people just don't always think about. And same with personal pension contributions. So any that are done from your net salary, basically, when I'm saying that. So after you've paid your tax, if you're paying into a pension, keep track of that as well. End of the tax year, same way to gift aid, increase your basic rate band.
Oh,
just little things.
Tax savings. Yeah. Tax saving tips with Marc. We've got our own little column there.
Yeah. There's little things like that people just aren't always aware of. So
that's I bet you 90% of people aren't aware of that.
No. When you ask them at the end of the year, like, well, made any charity donations? Like, well, I have, but I don't know what. So
you need to keep track of them. It's important to keep track because there's no other way to keep track of them.
Exactly.
There's no HMRC don't come to you and say, oh, by the way, you've donated some money. Here's a
It is a bit easier now with like things like Just Giving. You can have a track from there, can't you? What you've donated to. But yeah, in general, if you're just doing it.
Just popping it into other charities and just ticking the box.
Yeah.
The little envelope comes around. The little cash ones that don't show me age.
Do they still exist?
I'm sure they do somewhere. When you put your check.
Yeah, they all have their little storage machines now, don't they? The little card machines they have carrying around.
Well, can you gift that on those?
Yeah, probably. I imagine they probably do, don't they?
I don't know. Well, hopefully they do. Well, somebody have to write and let us know it. We're definitely showing our age. You sounded hip and hop and happening at that point, and then you've just let yourself down.
Oh, I'm assuming that would be how it works. It's 2023 now.
Oh yeah, but I'm still with my little cash envelope. So at least you've got computers. I haven't got that far.
True.
Is there any other tips?
And others, so there's things like when you're gifting as well. So you've got your annual exemptions when you're gifting for inheritance tax purposes. So you've got your £3,000, making use of those sort of things if you are trying to
reduce down your estate.
Yeah, reduce down your
estate.
So
if I'm trying to reduce down, so when I say reduce that down from inheritance tax point, if I'm trying to get my estate for just me as an individual below 325 or below 650 as a married couple.
Yeah.
Okay, so if I'm trying to get that down, I can gift £3,000.
Yeah, £3,000 to anyone. Yeah, so that's per tax year that as well. So.
And using other allowances like I suppose your annual exemption for capital gains tax.
Yeah, exactly. Yeah, so it's just making sure it's just structuring things properly in the right way.
So it's what's it called, Mark? Go on.
Preparing, isn't it? Always be prepared.
And always forward planning.
Forward planning, yeah. Prepare. Come and speak to us. So if you've got an idea, you want to look at inheritance tax planning and things like that.
And making sure you don't miss out on those allowances because that allowance, like I said, as a personal allowance, it doesn't roll forward to next year. And all of a sudden you've got double. It's gone that year.
That's it. Yeah, you've got to make use of these and plan ahead.
So it's all about putting the strategy together to reduce to reduce your capital gains tax, and also to reduce your inheritance tax. You could do both at the same time.
Yeah. With the capital gains tax, it's been reduced as well, isn't it? So your annual exemption used to be 12,300.
Yeah.
It's come down to 6,000 in the current year, and the plan is to reduce down to 3,000 in the following year. So it's a big change.
It's really important. Obviously, you can't do anything about what's happened in the tax year up to the 5th of April 2023. You can't think about that one, but you can. Now going forward and make sure you're utilising. If you've got, you're married, you've got two allowances to potentially.
Yeah, if you're looking at selling things, try and get it done before the allowance goes down again.
Ooh, that's good. That's half into a half again.
Yeah, half again. Yeah, that's the plan. Like say, it could change. You don't know.
Well,
but the way budgets have been, you
we'll
don't
have
know.
Budget next week, but
you don't know. But that's the plan at the moment.
As we're speaking today.
Yeah, exactly. Yeah, and it's a big change because 12,000. If your husband and wife and you owned a property together, for instance, that would be 24,000. Now be 12,000 and it's going to go to 6. So that's worth being very proactive about. Anything else any other allowances that have dropped? Other allowances that have dropped,
dividends.
Dividends, your dividends have gone down, haven't they?
Yeah. So dividends have dropped from £2,000 on dividend allowance.
Yeah, it's what it used to be. So that'd be £2,000 tax free essentially on your dividends.
Yeah.
And it's gone down to £1,000.
£1,000, yeah. And they're talking about reducing it down again in the next tax year.
You can see the way it's going, can't you?
They're trying to get rid of all your tax-free allowances. They want to get loads of tax in.
But no, it is growing that way, isn't it? There won't be a tax-free dividend allowance at some point, if it keeps going that direction.
Yeah. So I think, I mean, back when I started, there was no tax on dividends.
No, it was a basic rate. Yeah.
And now there's obviously they're chipping away at the tax-free allowances.
Yeah. So it has been hammered, the dividends. It's still cheaper than, say, your salary. It's taxed at a lower rate, but it's still not as good as what.
It's not as it was.
No.
But it's worth looking at actually whether it's beneficial to be a sole trader or a limited company, and that comes up again.
Definitely.
So it's even with I'm not going to go into it on this one, but corporation tax rates are going up.
Yeah.
So they're going up to a 25% maximum.
Yeah. So
it's that's a separate podcast. I'm not going into details on that one. I'll let you off the hook, Mark, on this one. It's far too complicated.
No, but it brings back the question then, doesn't it? If you are a limited company, salary, dividends, or do you have a higher salary and lower dividends? It throws it all in now. So. And
then it's a case by case basis. There's no rule of thumb we can go. I mean, we can categorically say corporation tax is going up.
Yeah.
And we can categorically say that those allowances are changing.
Yeah.
But what we can't say is which one's more beneficial.
Yeah. Or which one's not just beneficial is. You shouldn't just be driven by the tax, should you? It's what's right for your business as well, isn't it?
Agreed.
Yeah.
Well, and a lot of people are. I mean, it depends on the driver, and also it's the people. It's the driver, because some people's driver, you'll always get to somebody who'll say it's worth buying loads of equipment and loads of assets before your end of accounting year to make sure you're tax relief on it. But then don't forget that actually, you're using the higher rate, you're still spending 75% of that cash.
Exactly.
So if your business hasn't got the cash to do it,
it's
probably not worth doing because you've got loads of equipment out there but you can't use it.
Exactly.
I've got 14 trucks though. it's not really. It's
No.
again case by case.
It is.
What
Like,
your business needs.
yeah, tax is one point, but it's not the only point. So you've got the other things to look at, which is what we try and advise on, isn't it?
Yeah, we're trying to look at the overall
Yeah.
picture, don't we? It's actually, we're not just accountants or tax advisors, we're actually business advisors as
Yeah.
well, and that's probably more the business advisory side of
Yeah,
things
exactly. Yeah.
that we probably haven't explored that much on these podcasts, to be
Yeah.
honest. But that's one. That's another topic I could look
There
at,
we
our
go.
business
Look out for
advisory
that
side.
one.
Yeah, that'll be, that's probably more into my side,
Yeah,
so
I was
you
gonna
give me
say.
a good in that, Mark.
Yeah, that one. I'll enjoy that one.
Have you any other
Any
things
other-
that are changing in our lovely world of tax?
Anything else that's changing?
R&D tax is changing, isn't it?
R&D, we did that in the last podcast. Didn't we?
Yeah, I know, but we can do a refresher. Because some people might not have listened to the one before.
Yeah.
Our loyal listeners may have done, but they might just want to join in with the birthday celebrations.
Yeah, that's true.
So,
Yeah.
as we're talking, let's put a bit of doom and gloom on the birthday celebrations. What's happened to R&D?
It's getting clamped down again, isn't it? So you should be fresh on this as well.
Yeah, I should be. Okay. R&D it's changing.
Yeah.
It used to get the 100% in your accounts and an additional 130.
Yeah.
So it used to be 230. Now it's actually reducing, so you get your 100% in your accounts as before. And then what's the uplift, Mark?
86% now.
86%. So we only get 186%.
Yeah.
That's only.
It's still a lot.
It's
but
still
not
extra
bad.
8% more than
Yeah.
I've actually spent, isn't it?
Yeah,
So you're
yeah.
still getting a nice tax saving there.
Yeah.
But it's another thing that's changed.
Yeah.
So
And that seems to be like the trend, isn't it? Everything's been hit a bit harder, doesn't it? So
I suppose they've got to. I suppose from a HMRC point of view, they'll start try and get back those other
Yeah.
things they paid us out during COVID and all that
That's it,
sort of
yeah.
things. It's one of those, isn't it? They gave us it when we really needed it.
yeah,
So I suppose it's time for them to start charging it back. Although it's
Yeah.
not.
it had to happen, didn't it? All that money was handed out, so you knew it was going to hit us at some point.
Absolutely.
Yeah.
It's still never nice when it does.
No.
though. Nobody ever wants to pay it back. Of course, we don't want to pay it back. But that's it, isn't it?
Yeah.
And that's the good thing about, and it's probably more important than ever to
Yeah.
plan, because those allowances and actually how can things be utilised and changed or whatever in our world. I mean, yes, tax law's changing,
Yeah.
but in our world as business, how can these things change and improve and help?
Yeah. So the other change that's coming in that's probably going to affect a lot of like sole traders and partnerships is the whole basis period reform, isn't it?
Oh, so what's happening with that then?
So it is very complicated. So it only affects the people.
Simple, Mark. Simple.
Yeah. That's why I'm trying to be clear. It only affects people if you're a sole trader or partnership where
Okay.
your year end is into the 31st of March or the 5th of April.
Okay.
So if you're out of line with the tax year, basically,
Yeah.
going forwards, you're going to have to be taxed on a tax year basis.
Okay.
Whereas previously, say your year end of your accounts was 31st of July,
Yeah.
you'd be taxed on the profits ending 31st of July 2022 in the 22-23 tax year.
Yeah.
Going
Okay.
forwards, you'll be taxed on the tax year basis, so it won't be what your account year end is.
It will just be on. So effectively, if it was the July,
Yeah.
I'll be effectively taxed on effectively April. Let's just go month
Yeah.
end. Let's go so effectively from the 1st of April
Yeah.
to the 31st of March.
Yeah,
Okay, so I can still account for it in my world,
yeah,
but I just can't. But tax wise, it's on a
Tax is
tax year basis.
yeah. And the biggest problem with that is the first year, like the transitional year to it, you're going to be taxed on how you normally would, to say 31st of July,
Yeah.
plus then from the 1st of August to the 5th of April.
Oh, so you can pay tax on the same money twice.
Twice, yeah, that's the.
Okay.
So it's a very complicated, and it's like we've got loads of blogs out there. But if anyone isn't sure whether they're going to be caught by it, just get in touch.
Just please ask, because obviously to make things a little bit more complicated, there was the initial bit, wasn't there? Right at the start, you used to pay tax on the profits.
Yeah.
When I started way back when,
Yeah,
I'd have paid tax on probably the same money twice, maybe. But that's what it's worth exploring.
yeah.
Because it might be a case that you have got the I can't remember the words.
Overlap profits.
The overlap
Yeah.
relief. Thank you, Mark.
Yeah.
See, Mark, so you're talking about the overlap. So you might have overlap allowances that you potentially
Yeah.
use from before,
Exactly.
but it's
yeah.
worth looking at that point of view. So you might think you've been caught by it, it's going to be a stinky, but actually it might not.
No, and if you are caught by it, then there's things you can do. There's a spreading election
Okay.
where you can spread the extra tax liability you've got from being taxed on that extra bit over the next 5 years.
That softens the blow a little bit.
It does, yeah, but say it is very much case by case. That won't be the right thing to do for everyone. So
Yeah. As I said, because some people might just want to get it done and gone.
Yeah.
And actually, it might be a case that the profits are low in that year, and you don't want to spread it.
Yeah.
But then it's worth just exploring, asking those questions, and actually being proactive, isn't it?
Yeah.
All this stuff is proactive stuff. It's all
definitely. But like I say, it's not everyone that's going to be affected. It's only if you're out of line with the tax year with your accounting year end. So don't everyone panic.
Yeah, I was going to say, if your year end's already 31st of March, you're already on the tax year basis, so it doesn't matter.
Yeah.
So that's just again sole traders and partnerships. There's nothing. Nobody else has got to worry about that.
No, exactly. Yeah.
Do you know? I've just realised, Mark, we are the only special guest today.
Yeah.
We are the special guests.
I know. Yeah.
I was just there thinking of all the special guests we've had, and actually, maybe we're the best. Maybe we're the best guests.
Yeah, we only wanted to do it twice, I guess, as special guests. First,
we've only been more than once.
Yeah.
Well, in fact, we've been on more podcasts than just one as well.
Yeah.
So therefore, we must be the special guests, the most special of them all.
I'll let you sell that one.
Well, it's up to the people listening, I suppose.
True.
You have to let us know your favourite guest as well.
Do a poll somewhere. Yeah.
Have to be a poll.
Yeah.
You can just WhatsApp us. We'll see how then we get the votes come in, and then we can have effectively like a football player's player realistically.
Yeah.
But it'll be podcast guest.
Yeah. Good luck.
Podcast guest of the series. Any other tax savings or any tax advice? That's got on Martin Lewis.
Yeah. The one thing that everyone hopefully has come across when he's saying Martin Lewis, the thing he's been hammering home to people is checking their NI records. So you've got till the end of July, so 31st of July, to make up gaps between 2006 and 2016.
Okay.
So they've created a window for those tax years where people with shortfalls can go back and top up.
Yeah.
Because normally you can't go back that far. So if you're approaching retirement age, or even if you're not, it's worth checking, because it could be you only need to pay a couple of £100 to get an extra qualifying year. So.
And if you get the qualifying, obviously, if you don't have the qualifying years, obviously that'll affect your state pension.
Exactly,
I'd have thought.
Yeah, you need to get to 35 qualifying years, don't you, at the moment for your full state pension. So.
Ooh, how many people that's going to catch out?
Quite a few, I know, and it's HMRC originally, the deadline, I can't remember what it was, I think it was sort of at the end of April, but they extended it because they were so busy they couldn't.
So I can imagine they couldn't catch up.
Yeah.
All these people that suddenly realised there were gaps from 2007.
So they extended it to 31st of July.
So really, if you're an employee, predominantly you'll probably be okay.
Yeah.
But if you're self-employed, if you're a sole trader, self-employed, just doing a tax return, for example, these are probably the most common people that have been caught. And if their profits historically have been, 7,000 or whatever, they may not have contributed, or even less than, whatever the threshold's been over the years. I think average it's been about 5,000-6,000.
So,
If your profit's been less than that, you've paid no tax, and you haven't opted to pay the class 2 national insurance, then
you won't have a year.
Then you won't have a year. So that's the ones that will have been caught.
Yeah. Also directors as well. Like we work it, so the director's salary gives you the qualifying year, but not everyone does that, and it's something that's been overlooked before in the past. So it's just worth checking, isn't it?
So if you've only taken your money out of your company's dividends, for example, had no salary or no other forms of income, the chances are you haven't contributed your national insurance.
Yeah, it's something to be aware of, and so the time frame is pretty tight on it now. So.
It's catching up on us.
Yeah.
Before we know it, we'll be at July, and so then the window's gone, and then it's just more expensive to top up those years.
Yeah, but you can't go back as far then, so it's only limited time window to have a look at it. So.
It's really important for people. You should have started with that one. That was really important.
But it's in there, so
No, it is in there. Yeah. It is in there. But that one probably is the most important one.
Yeah, and we've had loads of clients with it. The easiest way to check is by creating a personal tax account online, to be honest, because that will give you it straight away as soon as you've got it. And those personal tax accounts are becoming more and more useful for people, so it's worth getting.
So that's something where you effectively, that's a HMRC gateway, really.
Yeah, that's okay. HMRC login, yeah.
Which is just effectively just for you, and you can check your own things.
You as an individual. So if you've got one for your business, it's separate to that. It's you as a person as well.
So that we're inundated now. This website will crash now. Everyone creating new gateways.
Hopefully.
So that's definitely worth thinking about. Yeah. So that's going to be the top tip of today's podcast.
Yeah, it has. Yeah, it probably is. Most important because of the dedeadline, but.
Oh yeah.
It's all about planning, isn't it? So.
Again, or obviously something that we talk to our clients about every day.
Yeah.
Pension, state pension, you qualify a year, whether it be a sole trader, a CIS one, for example, go for a refund. Yes, you're 160. It's 163 quid a year or whatever it is. 165 quid a year. It's not massive money.
No.
And if your accountant includes it, fantastic.
Yeah.
And if your accountant doesn't, then that's where potentially you can have a problem. Because you're a hero in year one, aren't you? You've got no tax to pay, you've got nothing to pay.
First
and you think, blimey, this guy is unbelievable, or lady is unbelievable. But actually, 10 years down the line, when we're talking about it now, and you don't make those contributions.
That's it. So the state pensions, people only really look at when they're approaching it.
Yeah.
But a lot of the time, by then it's too late.
You don't think about it in your early 20s, like us, yeah.
Exactly,
you know what I mean? It's when you are, 50 or 50 plus. Generally, I'm finding a lot of people look at it come 55. When they start taking out their tax-free cash and that sort of stuff, and their other pensions.
That's when they're starting to think about retirement, isn't it? So it's.
And obviously, we did do one about preparing for retirement and all that sort of stuff. Well, a while ago now. Feels a while ago, but it wasn't that long ago actually. but yeah, and those sort of things are really important.
Yeah, definitely.
So yeah, I've actually got a tip that's come up in my world, and one of the things that we've got that we're seeing quite a lot of is people have accumulated income and cash within those. So people used to have theories that they wanted to have a trading company, so they used to have a holding company on top of it, okay, and then move all their cash to the holding company to secure it, keep it nice and safe, and then invest it.
Yeah. And
invest it in property was always the key thing. This isn't financial advice, this is just what people decided to do. And obviously the interest rates have gone up and things have changed in that world, and it's now quite, so people are telling me that the return on investment isn't quite as good for that. So then they're building up cash, going, well, what on earth do we do with it? And obviously a lot of my instruction is, well, speak to a financial advisor, because really investments isn't our specialism.
No. Yeah.
But from a tax point of view, pensions are good for tax savings. So then, what HMRC have done, and this is where Mark's going to jump in a minute with a number, hopefully not a number. But what they've done is they allow you to put in a certain amount into your personal, from your company, to be able to get tax relief on this into your company pension, effectively personal pension. Yeah. This is what financial advisors tell me that they can do. Put it in, and the company will save tax on that element. So it used to be 40,000.
Yeah.
So you used to have to put in £40,000 per year. Okay. There's criteria within there, so it's not as simple as it sounds. But you put £40,000 into it, save your corporation tax, which at the old rates would have been a nice saving of 19% on that 40,000. That's a nice savings. Okay, and going forward it will be at the highest of 25%. Yeah. So it's beneficial. HMRC in the current tax year, I believe.
Yeah, increased it, so you can put 60,000 in now.
60,000. So my 40 is now 60.
Yeah.
Okay.
The thing on that as well is, if you haven't put it in the previous 3 years, you've got the brought forward from there as well. So say you've only put 20,000 in last year, you'll have 20,000 that you can bring forward and add in as well. So
I can put in £80,000 this year. Assuming that cash and everything's rosy.
Yeah, it gets a bit more complicated with high earners, because then the amount you can put in gets restricted. But the basics, 60,000.
Okay, basic level, nice and simple levels. Yeah. So then therefore the cash isn't just sat in this company doing nothing. The cash isn't potentially saving tax or whatever that be. Obviously, it's always good to talk to financial advisors rather than do it yourself. Yeah. It's definitely not advisable to do it yourself, because they will be aware of these increasing things, and and obviously if you've already taken a pension, there's other things that come in effect that which reduce the amount you can put in. So it sounds all well and easy. I've got this money in the company and I can't put it into property, so I'm going to put it into a pension. But actually, it might not be as simple as that. It's again a case by case basis.
Very much case by case.
But that's something that we're seeing. A lot of people are trying to hold on to their cash now and not put it into property investments because the interest rates have apparently affected the return on investment. Yeah, and I hear from a lot of landlords that it's just becoming harder and harder. Like they're getting more and more criteria they have to meet. So it's not as attractive as what it was. So not only is it affecting your return on investment, actually you've got to spend more to be able to have. And actually, this isn't a landlord podcast. No. It's not going that way, but it is going that way. So there's a lot of things are changing in that world. Yeah. So it may or may not be. We might see a shift in where people decide to put their money going forward, but who on earth knows? No,
I can advise on the tax side of it.
We can't advise on anything else. We can tell you what people have thought about doing and what people used to do, but You know, the actual financial advice side has to go through financial advisors.
Yeah, definitely, that's their area of specialty.
Well, exactly. I mean, it's like me advising on used cars. I haven't got a clue about used
I
cars.
thought that's what you did on a weekend.
Yeah, but don't tell everybody. It's heating and plumbing actually I do on the weekends. But we don't like to. You know, I'm one of them, master of none, jack of all. But I think that's given quite a few good tax saving. Blimey. You've impressed me today, Mark. Impressed me with that.
You impressed me as well.
Well, I've actually come up with an idea that wasn't the Neil phone.
You're not the Neil phone, you weren't plumbing.
I wasn't plumbing, no. And I didn't have my dad with me.
No.
No, in fact, he should get a mention, actually. He's not actually my dad, he's not. But, you know, he come out with some genius tax things a while ago. You know, there's so many guests that we've had that have given us so many really good ideas.
Yeah, insights to different parts. And
their worlds are always changing as well. So, you know, you'll be seeing them again.
Definitely, yeah. Tax and everything is always changing. And as you've seen in the last few budgets, you don't know what's going to come next. So it's...
we don't.
Yeah.
we haven't got a clue.
It's been hard to keep up, isn't it, the last 12, 18 months or so?
Yeah. When you sit there and talk to clients, you're there thinking, I'm sure that's what it is.
Yeah.
And you have to go back and check it because you've had effectively 3 budgets to try and remember where...
Exactly, and this is why planning is important. But once you've planned it, don't just leave it. You've got to keep on top of it to make sure that if something does change, how that impacts it.
Yeah. For example, I was with a client the other day, actually. We're talking about dividend tax rates.
Yeah.
Because dividend tax rates were supposed to, allegedly, drop down back to 7.5% again.
Yeah.
But they didn't.
No, it's how it's worked, isn't it?
So it's still as it was at the 8.75% at the lower rates.
Yeah.
So not...
That's in the current year, isn't it? The previous year, so 22, 23. You're looking at that, yeah.
So 22, 23. It was effectively the 8.75.
Yeah.
Okay, and it's still 8.75 now.
Yeah.
Well, So you're right. So then it was in 21, 22. It was at 7.5%.
Yeah.
And it was supposed to only be a 1 year drop.
Yeah.
Oh, sorry, one year increase. Sorry, and drop back down again, but it hasn't.
Yeah, that was all to do with the health and social care living.
That's it. The one because it went up in July.
Yeah.
Last year.
On the NI, yeah.
On the NI, yeah. So it all changed, but then it's actually remained as it.
Yeah, it is a minefield.
So that's something to bear in mind about the dividend tax. The rate hasn't dropped.
Yeah.
That caught me out, and I know what I'm doing. So let alone people that don't know what they're doing, it's or aren't specialists within that. So that's something to remember. I think that's highlighted all the key ones. I can't think of any more for today. Can you?
No, but like I say, if anyone ever has a topic they want us to cover, just drop us a WhatsApp on, what's that number?
01905 777 600. There we go. See, Eve, you have to on your toes with Mark. He catches you out with these little curveballs.
I have to get in there first, that's why. Otherwise it comes my way.
Absolutely, yeah, that's true. I think, it's definitely missing. Those birthday parties.
Yeah.
You have those things that you blow, and it's like, that's what we need.
We'll have to get Finn, the producer, to add them in, won't we?
We sat there with a little happy birthday hat on.
We've got the banner that hopefully.
Yeah, I've got the banner. To be fair, yeah, I don't know if you can see that or not, but
hopefully,
Yeah.
Well, they won't be able to see it if they're listening and not watching.
That's very true. That is very true. Well, we can tell you that there is a banner behind us, and we're not sat here in party hats, and we haven't got things with us. That's what. But yeah,
there's no cake actually. Is there?
There is no cake. I was hoping to blow out a candle. Yeah. I suppose health and safety.
Yeah.
You can't have candles and fire in the office. Wouldn't trust me with a candle. No. But thank you for listening.
Yeah, thank you.
So that's our first year done, and
halfway through the next year.
10 years before we know it. I think then we're going to try and think of a guest over the 10 years.
Oh, that'd be a tough one.
Worry about that when we get to 10 years.
Yeah, let's get to 10 years first.
That's if Mark hasn't got rid of me by then. But thank you very much for listening. I hope you've enjoyed not just today, but the last year too.
Yeah, thanks for your support.
Thank you.
So thanks for joining us today. Hope you've enjoyed our birthday episode.
Happy birthday.
Happy birthday to us. We'll go and have some cake now.
Oh, happy days. You're buying.
So next time, we're joined by Julian and Dina, where we're going to be focusing on small businesses.
Fantastic. That'll be really useful, won't it?
It will be. So 2 special guests next time for you. If you've any questions to ask them, give us a WhatsApp on
01905 777 600.
Thanks for listening.